Why does the gold price go up? Let me tell you the main reason the gold price goes up. All the gold dug up in the world is a lump of metal 20.4 meters by 20.4 meters by 20.4 meters. That's all the gold ever dug up in the world. It grows about 2% per annum with production, and it shrinks about 2% per annum with consumption in things like electronics. So you've got this inert lump of metal, 20.4 meters square, sitting there, earning nothing, doing nothing, looking pretty if it can, and a whole load of people are running around it deciding what the price is. And in the last couple of decades, two things have happened. One is exchange-traded funds came along and bought, if it bought 3 meters by 3 meters by 3 meters, it completely changed the supply dynamics of this inert piece of metal. And it's just an amazing thought that if you could create an exchange-traded fund backed by physical gold and start selling it, then as you sell, you've got to find the gold. So you go into this inert, stable 20.4 meter cube and start buying chunks of it so that people can invest in gold. So it was self-fulfilling, really, that when the exchange-traded fund started in 2003, people started buying gold as an investment. It shoved the demand up. Consequently, the gold price went from between $200 and $500 an ounce to $3,500 an ounce 20 years later, and it's still going on. Exchange-traded funds are buying gold when gold has a run, and it's a squeezy commodity to get hold of, and it's backed by physical gold. So gold has been squeezed and squeezed and squeezed. Add on top of that, and that doesn't look like stopping, got to tell you. Add on to that currency. If you've got an inert piece of metal and everyone's running around it wondering what price it should be, if it's priced in US dollars, and then you go out and because of a global financial crisis, you print twice as many global financial crises for one thing than COVID for another, and you go and print twice as many US dollars, then the US dollar is worth half as much. So the price of gold and anything else priced in US dollars, the price of gold doubles. Not because gold is worth any more, but because the currency is worth less. And that's what's driven the gold price as well. So one of the biggest drivers for the gold price is when the US dollar goes down, and you will find the gold price goes up. So if we're faced, as we are at the moment, with the US having a lot of debt, that weakens the currency. A currency is really a reflection of how strong an economy is. If they put tariffs in and it slows the US economy down, the US dollar goes down. If they start to cut interest rates, which it looks like they're going to, the currency goes down because it doesn't yield as much. All this is pushing towards a weaker US dollar, and a weaker US dollar is going to cause the gold price to go up again. So combined with the risk of the big one, a falling US dollar, exchange trade fund buying, and the gold price goes up. And that's what's going on at the moment.